Hey traders, welcome to Charts and Coffee. Happy Wednesday, everybody. Hope everyone's having a good morning, properly caffeinated. Time to caffeinate and dominate. We are taking a look at the S&P at the moment. We're taking a look at the 5-minute, the 1 hour in the center, and the daily. And if you caught yesterday's free video at the Simpler Trading YouTube channel, let's see, not my channel, although I should really put that one there, and maybe I will. If you haven't already checked out my YouTube channel, you can find it over at YouTube at my first name, last name, Raghee Horner. But this one was over at the Simpler Trading YouTube channel, and we went into a lot of detail about the S&P in this one. So thanks for all the comments and views and likes and all that good stuff. Here it is, trading SPX, ES, and SPY. I wanted to put all three of those symbols in there because there seems to be oftentimes in the trading populace this thought that trading the micros is different than trading the mini futures, or trading the SPY ETF is inherently somehow different than trading the SPX. And I'm here to tell you that if you're trying to get a complete, forget right and wrong, right? There is no right and wrong here. It's preference. Chocolate ice cream's great. Vanilla ice cream's great. It's all ice cream. In this case, the ice cream is the S&P. The best way to get a complete view of the S&P is to use the ES minis because they are the nearly 24-hour view of what's going on with the S&P. And that's what I really broke down here. How do you start with the S&P? Really, that 23 hours a day this thing trades. What you're able to get with that is a running start with your indicators, with your price action, with your volume into the bell. And then once the bell rings, you're free to look at things like the ES still, right? SPY, SPX, right? And so I spent about the second half of the video breaking down HPMRs, DPMRs, the multi-trend, the grab candles, support and resistance levels on the SPX. And you'll notice every single one of these versions of the S&P, same layout, same indicators, same settings. And so really, if you haven't already checked it out, please do. I think you're going to find not only the different breakdowns of the flavors of the S&P will be helpful, but also how I'm looking at the 5 for day trading, today trading, as I like to call it, versus the 1 versus the daily. And by the way, if you ever, not that we are always going to plan to get in and out of the trade on the same day, but if you are, right, that's a day trade. So don't get hung up on what day trading means. It simply means you're going to be out by the close. And I would tell you, observing what most traders do, observing what we do here at Simpler, most of the trades, I'd say probably 70, 80% are trades that are executed, entered in the morning, and then executed, exited sometime before the close, right? That's a day trade. It's just a today trade. So let's open our minds to what that means and what that can open up, and forget the fact that somehow day trading has been linked up with in and out, rapid movement. Nothing wrong with that, right? But it doesn't have to be that hands-on, right? Anyway, but I mentioned that, and that's a cool video to check out over at the Simpler Trading YouTube channel. That being said, what is the ES doing today? One of the things that we talked about in that video is that the hourly time frame continues to indicate an uptrend, and that a lot of the fuel in this uptrend is going to come from primarily two places broadly. One is what we're looking at right now in XLF. This is the financial sector. This is the number 2 weighted sector in the S&P. So while XLK is predominantly and probably the king of all sectors, if you've never thought about, Ron, what's the most important sector? Forget index. And by the way, what's the most important index? It's the NASDAQ, gang. It's the NASDAQ. It's not the S&P. The S&P is the perfect, as far as we have in broader indices, the perfect amalgamation of Dow and Nas, right? It's a little XLK, tech, little XLF, financials, little XLV, healthcare, which is going to cover what the NASDAQ and the Dow do separately, but the ES is a good reflection of both. Now, XLK is really the king of sectors because XLK is number one weighted in the NAS, number one weighted in the ES, and number two in the Dow. So if you're looking at sort of a trend not to buck, it is tech. And that's where XLK plus XLF in a little heart, right, is where the ES is really going to find a lot more upside. And that's why I don't want to bet against it, at least in the 5-minute, 1 hour type view. All right. So with that being said, as always, if you have any questions, feel free to type them in. And you know what? I love this question from JR here. And this is, what do I think of a swing trade 1 to 3 days? Love it, JR. So what did JR ask? I know what time frame, at least within the confines of what we talk about here in Charts and Coffee and in the Sector Secrets Mastery, which, by the way, if you want to check out what we're doing, if this kind of analysis is intriguing, or you think, Rock, I've been watching you a while, and gosh, you've been bullish all year, and that's pretty much what we've seen. You never went bearish on things like the NAS. You never went all hyperbole and fear mongering with a lot of the indices. And lo and behold, other than the Russell, here we are, right? Hard to bet against this environment, despite a strong dollar, despite the yields moving higher. How did you stick with this? It's the indicators, gang. It's the process. It's the sequence that's been time tested for 30 years. So I try not to outsmart myself. So if you find yourself, gosh, Rog, I talk myself out of great trades. I don't trust my indicators. I have no risk management. Come check out what we're doing, because that is what we do every single day. Sequence driven, probability driven, and it's working out pretty darn well. So how do we make the CL work? Let's talk about the challenges of the CL. I love this, JR, because this is where it's so important. Let the indicators be the guide. Here's a great example of something that for a long period of time, I'd say about 60 to 90 days, XLE, crude oil, USO, these were all really Exxon. These were great trading corners of the market for us. And then all of a sudden it fell apart. Now, how do we know when to stop doing what was working? That's the hardest thing in trading, to say, look, Rog, we've been doing this, this, and this, and it's making us money, and you're telling us to stop now? How do you know? Why would we stop? And I'll tell you, my overall opinion in August, September, and even through most of October was crude's generally bullish, crude itself. So that's going to map to USO, by the way. USO is the ETF alternative to crude oil. This is the futures contract. Again, more complete. USO is that slice of psychology represented by an ETF that trades between 9:30 and 4 p.m. So when I'm looking at crude oil here, it is USO, right, gang? Okay. We broke the 200 on October 31st. Crude oil came knocking on the door, said trick or treat, trick, right? Here we are breaking down through the 200. And if you've never heard me talk and talk and talk about the 200, gang, I'll tell you what, if someone said you're allowed one indicator, it'd be a tough call for me. Like, you know, all the things that you created, and most of the indicators you see in my chart are things that I created out of necessity, right? I have a question and I don't have an answer to it. So we created certain indicators like HPMRs, DPMRs, etc. And I've always said it would be the multi-trend. I've come back and said, look, market trend structure, whether we're going up, down, or sideways, is step one of every trade. But I got to tell you, tied or close second would be that 200. The 200, especially with the way that we've modified, I'd say modernized, the 200 here at Simpler. What happens when an 8 exponential moving average crosses a 200 and interacts with price in a certain way? So what if you kind of make a self-correcting, smart EMA? That's the 200 propulsion on my charts represented by those white dots. We're below that right now on the 5-minute. Right? So I'm going to probably be bearish, very likely, as a day trade, as a today trade. I'm also going to be bearish 1 hour. And then on the Daily. So if I'm going to go 1 to 3 days, JR, that choice is so perfect because that's the one spot of the three that I have a trend. So what do I think of it? I think that if those red candles trade up into that yellow zone, let's go granimals with this. Let's color code sequence drive our trades. Red trend, that means it's a downtrend. Yellow or gold zone, that's resistance, right? Gray is support, gold is resistance. If those candles that are red right now, which indicate bearish momentum, bearish trend, trade up into that resistance, absolutely. Long puts in USO, long puts in the crude oil futures. You can short crude oil futures. You can short the micro, the MCL. So 1 hour is so perfect on so many levels, JR. And I'm sure you know this, but the reason it is because that is the time frame amongst the three different time frames and time horizons that have a trend. Love it. And that's it. That's it. All right. What about Natty Gas as a dip buy? 305. So let's do the same thing. So if I'm going to take the way we took USO, went to crude oil on UNG, which I agree when it comes to contracts like silver, Natty, I do like to use the ETF alternative because the underlying futures contracts can be bonkers in volatility from time to time, which increases volatility and risk, right? Risk and volatility are traveling the same path. UNG would map from NG. NG daily is in an uptrend. So if I'm going to buy the dip necessitates an uptrend. By the way, 305, here's what's interesting. We're below the 200 on the daily. I might favor until the daily time frame can either get back above the 200 white dots or stays below. I might favor a short term. And the reason is we're at a crossroads. When I look at where that 200 is in relation to price, I know that there's some soul searching to be done here, right? There's a decision to be made around this 3.2 level on Natty, which is going to map to things that are happening on UNG. So until we can either be above this level or stay below, I might favor the 1 hour or the 5 minute, shorten the time frame, shorten the time horizon, and then ultimately see if Natty is going to stay below 3.2 or in that 200, or if it's going to get back above. So I've got a downtrend on the 1 hour. I've got an uptrend on the daily. I might favor this one. Oops, I didn't mean to move my chart. There we go. I might favor this 1 hour for now until we figure out what's going to happen through that level. All right. So a little different in regards to that stance along the 200. And that might get me shortening the time frame as we figure out what it is that Natty wants to do. And right now, it's crossed down into the bearish hemisphere, 305. So while I do like buy the dip, generally speaking, what I'd want to do here, actually, you know what? I haven't put this back on my chart in a long time. Let's do this really quick. I'm going to go to the wave and I'm going to turn it back on. I'm just going to put those lines right back on the chart. And wait, there we go. So we are actually triggering a mean reversion right now. So if you're saying, okay, Rog, but I want to buy the dip. I get what you're saying about the 1 hour, but I want to buy the dip, which was the question, right? If the goal is to buy the dip, step one, zone. And actually, I might recommend waiting for this minor low pattern. You see that arrow right there? And it's a lower low, which ideally is going to be surrounded by two higher lows. That would be a great price pattern, not chart pattern. Don't use those. I don't use those. That would be a great price pattern to set up this trade with a minor low. Okay. So if you're looking specifically at the buy the dip, we're in the mean reversion. That is how I do it. All right, gang. So as always, if this kind of stuff is interesting, you think, okay, Rog, what the heck's a minor low? And why would the green and the wave be this setup here? Come check out what we're doing in Sector Secrets Mastery. We do this stuff every single day. Monday through Friday, we're live in the room every morning because, heck, if I'm here in my office, why not turn that mic on? So that's what we do. And I think that's a really cool buy the dip setup. But let's be aware of where we are around that 200. That could be a tricky one. All right, Alex, favorite Ragheeism for new people. Um, the S&P is a little puppy that the Nasdaq takes for a walk. It's true. It's true. But if you're wondering, to Alex's point, um, if you're wondering when the Nasdaq takes the S&P for a walk, as we say, the Nasdaq is the dog walker, then the S&P is a dog. But what about when the Dow is going to take over? How do we know the Dow is taking the S&P for a walk? And that is specifically when we see clarity in financials and healthcare. Now, if financials, healthcare, and tech are all moving, most of the time, all three of the broader averages are all going to be moving together, which is ideal for risk appetite. When everybody wants to buy all the things of the major averages, awesome. It's going to make for a great day of trading, more opportunity, and more importantly, more follow through, right? Who doesn't like more of the good stuff? So if I'm looking at the S&P following the NADS, it's because it's following what's happening, not just based on those magnificent seven, right? It's XLK, right? Number one weighted sector in both. So, Alex, yeah, that's true. And thanks for sharing. All right, next up, would I consider a swing trade in Apple? All right, so would I consider a swing trade in Apple? So now, where do we consider it? Yes, so if I'm going to take overnight exposure, right? If I'm going to take overnight exposure, it's going to be either based on daily price movement ranges on the 1 hour or daily time frame, or I can today trade the 5 minute, right? Where is the trend that prioritizes this right here? There's your focus, the 1 hour, chart. And then in a trend, look, I could do the same thing on the 1 hour as we just did on the, let's see here, on the daily, and I could just turn on the wave. And by the way, you might say, Rog, why did you turn it off? In an environment where volatility, not trends, are dominating, it makes sense to use volatility-based indicators like the hourly price movement range, the HPMRs, and the daily price movement range, the DPMRs. It makes much more sense to use our volatility-based support and resistance than a price-based support and resistance zone. Now, as we get more and more trends, especially longer term, it makes sense to turn on the wave, because now we can rely on a more mean reversion driven approach where there are trends. The only place with a trend here in Apple is the 1 hour. And so whether it's the daily price movement range or whether it's the 34 EMA wave reversion, either one would be valid. And I would focus the swing overnight exposure. That's really all swing denotes to me. Would I prefer it be a trend? Absolutely. Would I prefer a mean reversion? That's necessary. Would I like there to be a mean reversion, a pullback, a retracement, whatever you want to call it, ham sandwich, in the context of a trend? Absolutely. So Apple is not just yes, but it's yes based on a pullback, 1 hour time frame, 1 to 3 day time horizon. Remember, gang, and notice what I'm doing. This is the antithesis of multiple time frame confirmation. This is actually choosing a time frame. I could spend 20 minutes, I could spend an entire Charts and Coffee talking about why I don't use multiple time frame confirmation any longer. If it worked, we'd all be successful because we're all told use it very early on in our careers. Rather than saying, well, if the 5 agrees to 15 and the 15 agrees to 30 and the 30 agrees to the daily and the monthly and the weekly, oh my gosh, you know what happens? And I know a lot of you have done this because I know I've done this. All of a sudden, we're not trading a time frame for support, resistance, risk, reward anymore. We're just looking for the one that agrees with the position we have on. How many times have I seen a trader enter a 1 hour time frame, including this one, right? Well, oh, but the weekly says, really on a 1 hour, 1 to 3 day time horizon setup, I really give a rip what the weekly says? No, right? So avoid that mess, right? Avoid that mess and say, which one of the time frames is best embodying a trend? it has its own target. It has its own support resistance. It has its own setup. Stick with that, and you're going to find your risk management, your accuracy, your discipline is going to go through the roof. So great questions here this morning. That's how we're going to break down Apple. And everything I did here today, gang, was very much rooted in what I walked y'all through in yesterday's video, sitting there over at the Simpler Trading YouTube channel. Check it out, and then come visit us over at sectorsecrets.com and check out what we're doing in the mastery. Be good to each other, gang. I will talk with you soon.